Good day, fellow investors. I really think the government and everyone around it needs to keep this bubble alive. The S&P 500 was at 677 points in 2009, fast forward 15 years, and we are at 5,762. Add 40-50 points on average of dividends over the last 15 years, and this is a clear 10x from the stock market over the last 15 years. 10x. That's something insane, a stock market bubble, but it needs to keep on going. There was some little commotion last week, 2% down on tech earnings that we will discuss tomorrow. But if you look at the fundamentals, if you look at what's going on in the economy, in the market, government, debts, inflation, the fundamentals of everything that makes the financial world, yes, this is a bubble. This will likely lead to higher volatility in the future as the market will seek direction. But over the long term, the governments need to keep stocks up because that's the only way that the world we are living in keeps on the way it is. For those who don't know me, my name is Sven Karlin. We have a big value investing channel on YouTube, and if you're looking for that kind of perspective, this is the one to subscribe to. And let's immediately start with the fundamentals. If you look at the GDP, the economic growth is based on consumption, just spending, buying online, spending. That is the way that we live in. However, your consumption is based on your confidence, and your confidence is high if you have $122 trillion, this is US consumer balance sheet, in financial assets. Financial assets. So you have other financial assets, investments, etc., ownership in companies, pension funds, and you have even deposits. That amounts to 122 trillion, and that is a 3x since 2009. And I am pretty sure that everyone feels rich, and therefore that also fuels consumption. That is the main pillar of the economy. And when this grows 3 times, the economy didn't grow 3 times, this is a financial asset bubble, and the governments need to keep that bubble going because without this confidence, there is no consumption, there is no economy, and then things get worse. There might always be volatility because the valuations are high, the deficits are crazy, government debt is crazy, but I think, yes, there can be volatility, but the government needs to keep on borrowing to fuel the bubble. Plus, if you look here at net interest expense for the government, it is getting close to $1 trillion US dollars, which will then be about 15% of total government spending. When you spend 15% just on net interest, you need to keep interest rates at bottom levels, not at 5% as we are now. That is unsustainable for the government, and lower interest rates mean higher asset prices, higher financial assets, your home, your stocks, your everything. So the government has the need to keep interest rates low, to service the debt, to keep spending. Lower interest rates means you also spend more, and therefore it's very likely we will see more spikes of inflation in the future, because if you have debt, you service that debt with inflationary money, thus the debt burden gets easier in the future. All you need to avoid is a debt inflation spiral, but that's something for the future. And low interest rates means also that valuations that are clearly bubblicious now, like the 1990s 2000 dot-com bubble, stay high, and everyone wants to keep those valuations high. The long-term likely returns at these kind of valuations are close to zero and likely very, very low. So that's a given, therefore it is risky, but there might be crashes. However, I think the governments will keep on pushing on this and having the stock market, having the housing market go higher and higher and sacrificing the currency. That's the only way the governments can work this out, maybe. And therefore also, if you look at earnings, spending, everyone is projecting higher and higher earnings for companies. The government will keep on borrowing, keep on spending, keeping on in an inflationary environment. But this is the expectation for 24, $241 or S&P 500 points in earnings. Let me show you the reality for now. The reality is earnings are 196, not 241 as here is expected, and then growing at more than 10% per year. The bubble needs to keep bubbling because the financial asset bubble is the basis of spending, of the economy, investing, and whatever. As long as it goes, the governments will do whatever it takes to keep it bubbling. Low interest rates are necessary, are a must, because with higher interest rates, the whole house of cards falls apart. Lower rates, higher financial asset prices. And then the ultimate is inflation, and higher inflation, if you have businesses that can somehow give you some protection from inflation, that is then again something that will push markets and financial assets higher and higher. Of course, there are risks. There might be crashes, 20-30% down in any year, 40%, but then the government, the Fed, will react, print more money, and we will see how the next 10-15 years will evolve. It will certainly be interesting. I expect more volatility ahead, and then we will see where it goes. But keep in mind, this is a bubble, but it's in everyone's interest that the bubble continues because there is simply no other solution.